Thanks, Elise. So thanks very much for the opportunity to come along and talk about MiCA sustainability compliance requirements. I'm Kirsteen Harrison. I'm Sustainability Director at a company called Zumo, and we're a UK-based blockchain technology company, but sustainability has basically been in the core of all our service propositions from the day that we were founded. And so we're doing a lot of work on sustainability in regulation now as it begins to come in the crypto sector. Now, I'm aware that this audience is APAC and MENA, so some of you may not come under the scope of MiCA. We can talk about that in a minute, but actually it should be of interest wherever you are in the world because it is the first piece of crypto-specific regulation that's come in with sustainability disclosure requirements, and all jurisdictions are going to be watching this with a lot of interest. So at a high level, it will be relevant to everybody, but I'll delve into who it is most relevant to as we go through it. So the agenda is really simple. I'm trying to keep it high level. We'll just talk about the what the disclosure requirements are, who needs to comply, when it comes into effect, and then what we need to do in order to comply. So fairly straightforward agenda and all quite easy to follow. So firstly, in terms of the what, there is an article within MiCA, Article 66, which I'm showing you on the slide at the moment, which has sustainability disclosure requirements. And essentially, the requirements are to make sustainability disclosures publicly available in a prominent place on the website. The important thing to say here is, although you can only see 5 lines of text on this slide, these 5 lines of text are actually supported by a very lengthy regulatory technical statement, which is also part of the MiCA regulation. It's a level 2 regulation. And so although it looks like there's not much information there, there is actually a very, very prescriptive set of requirements that all CASPs need to adhere to. The purpose of this is for investor information. So the idea is that by making this information available on websites, investors can look at the environmental impact of consensus mechanisms of crypto assets that they are investing into. You'll see the wording here is entirely negative. It talks about the principal adverse impacts on the climate and other environment-related adverse impacts. It's not interested in the positive. So we've got quite a negative skew to this. And actually, some of you may be aware of the political background to this. And when the MiCA regulation was in draft stage, there was actually quite a big movement to ban proof of work. And that political pressure has made its way through into the MiCA regulation, and I think is perhaps responsible for this negative skew in the language. Now, that is important because it means that there's a big political interest in how this is implemented and compliance with this. And so I expect that there's going to be quite a strong focus from the regulators in making sure these sustainability disclosure requirements are met. So in terms of who is captured, hopefully by now you will have done some work as to whether you fall under the scope of MiCA or not. So I won't go into this in too much depth, but there are 3 tests. Firstly, organisations based in the EU or selling services into the EU would come under it. Secondly, the organisation needs to provide a qualifying crypto asset service, and that does include the usual suspects like trading and custody, but it includes some other things too that may not be so immediately obvious, like transfer services, advice and portfolio management. And then thirdly, the crypto asset itself needs to be a qualifying crypto asset. And basically all of them are, except where they are classed as a financial instrument, in which case they come under existing financial regulations. So that would be the case of an ETF, for example. But the support structure that underpins that ETF, custody, etc., would come under the scope of MiCA. So if you haven't already, get some legal advice as to whether you fall under the scope if you think it's a possibility, but I suspect most of you will have gone through this already. The timelines for sustainability disclosures are very, very tight. The deadline for implementing this is the 30th of December of this year. So I believe we're probably, weeks away from that now. There is a grandfathering period and the timescales for that vary with member states. But there's no direct transitional arrangements for sustainability disclosures. And as soon as a CASP is registered as a CASP under the National Supervisory Authority, then from day one, the sustainability disclosure requirements kick in. And from the reasons I've just said, because of the political interest that we expect to have here, there is an expectation that CASPs will comply with this from day one. So I've included some text from ESMA. ESMA's the regulator here, who clearly say that they expect this deadline to be met for sustainability disclosures. So what does it all mean? Well, I've included a screenshot here of the format in which we need to be providing this information. It is very prescriptive. This is not complete, by the way. There's about 4 or 5 pages of that table, but it just gives an example as to how we need to present this. So we need to provide sustainability indicators in relation to the adverse environmental impacts. We need to make that publicly available on the CASP website. It must be free of charge, it must be downloadable, and it needs to be reviewed and updated at least annually, but more often if there is a material change. And the aim is to allow public comparison of sustainability indicators for all the serviced assets of that CASP. There's a really clear requirement within MiCA that we need to apply methodologies that are rigorous, capable of validation and applied continuously. So there needs to be a real method to how this is done. And there's also a requirement to cite data sources, legal entity identifier, and various descriptive information. So basically what we need to do is provide the indicators. I'll come on and talk about what they are in a moment, but then we need to provide quite a lot of information as to how we came up with that number. What's the methodology we followed? What's the data source? What are the assumptions, limitations, etc. So in terms of the how we do it, the flow chart here kind of shows, the blue boxes show here that there's 2 key tests for what disclosures we need to make. So firstly, if the CASP is a trading type CASP, there is a higher level of requirement. And secondly, if the electricity consumption of that consensus mechanism is above a certain threshold, there's a higher requirement. And I'm going to talk about this in a bit more depth. So for any CASP and for any consensus mechanism that is below this threshold of 500,000 kilowatt hours per year, there is one mandatory indicator, which is annualized electricity consumption for the consensus mechanism, and that's what needs to be reported. However, where the CASP is conducting trading activities and or where the electricity consumption is above that threshold, then there's 5 additional indicators which are also mandatory. And that includes things like carbon footprint, and then it looks also at kind of intensity ratios, electricity use per transaction, etc. Just a note that that number of 500,000 kilowatt hours, it might look like a big number, 500,000 might seem big. That is not a lot of electricity. In the UK, it equates to the electricity consumption of about 180 houses over the course of a year. So it's the electricity consumption in houses of a very small village. So this is interesting. This is not how sustainability disclosures are normally put into place, and the threshold here, the materiality threshold, is actually very low. So those are the requirements, and that's what we need to report. There's also additional voluntary indicators which relate to things like waste production, which CASPs have the option of reporting if they so wish, but at the moment at least they are not mandatory. And there's requirements in terms of data sources that are used. So there's a preference for white papers to be used. And for those of you not familiar with MiCA, this is not your kind of standard Satoshi white paper. This is a MiCA compliant white paper that must have certain, there's really quite strict requirements as to what needs to be in these MiCA compliant white papers. So where a white paper is available, it should be used. However, there is a really big gap in terms of the timelines for white papers being issued and CASPs needing to disclose these on their websites. The CASP deadline, as we said, is the 30th of December, so it's a matter of weeks away, and there is absolutely no allowance for those CASPs to wait until a white paper is published. And I've included some text in this pink box here. I'll just read you out the bit from towards the bottom of the text. So it's saying that the regulator expects that sometimes CASPs are going to have to publish this without a white paper being available. But then it says, in such a case, the CASP would need to disclose on the website information on sustainability impacts, despite the absence of a white paper. So the requirement on CASPs is very, very clear, and we know that there will be a period where that requirement is in place and the necessary information to provide it may not be available via white papers. So to that end, if you are interested in finding out more, if you do think that you fall under MiCA, please do go and visit our website. We are currently working with CASPs to provide MiCA compliant reporting and to provide that data for them. So I've included our email address there. Please do get in contact if you would like to discuss more. We also just recently recorded a podcast on this where we look at the implications in a bit more depth. We actually recorded it with GDF friend Hogan Lovells, and you can find that on Spotify and various other platforms. It's just called the Zumo podcast. So thank you very much, Elise, for the opportunity to talk everybody through that, and I will